Hello everyone, my name is Kapil Shah and you are watching Quick Market Analysis by Finland Academy. So this week we have seen it on the volatile ground. The first 3 to 4 trading sessions we have seen a very strong selling pressure, and on the last day of the week we have seen the recovery. If you also observe that the day after the expiry we have seen the strong rebound. So from past couple of series that I am observing that once expiry happens, the next day we see it on the promising note, and this time also the same sequence that we have seen. Technically this week we have seen that Nifty has breached a 19,200 level, which is what in a medium term support level, so which is in a negative development. But with this negative development, all the way the market has further come down and it has tested the next best support level, which lies around the 19,000 18,800 to 900 between, which is also coincides with long-term moving average, that is a 200 period moving average support, and we have seen the very sharp rise over there. From a RSI perspective, we can see that market has come down and it is under the oversold zone. So yes, technical bounce back cannot be ruled out. There can be a further improvement, but on the higher side, we see that this improvement can stretch up to the 18,200, 18,250, which is what our previous resistance level. So let's say this is what my first level, the level at 19,225, and this is what my internal resistance level that I can see, which is a 19,320. So on the higher side, I expect that 19,200, the 320 can act as an stiff resistance in a coming time, but till that there is a further improvement that we see. 18,800 level become the good support level, not just because of one day declining momentum happened and prices picked up its momentum, but historically 200 period moving average and the previous role reversal levels are there. If we are seeing that market is moving below 18,800 level kind of thing, then the next best potential support level that arises is around 18,500 level, and then this is what the next best level, 18,200 level. So this is what the next best range that I am seeing. This level, if you see that prices has came down up to what level it can retrace. So if I'm taking the help of the Fibonacci retracement level, so also it indicates that whatever the levels on the line charts that I have drawn within horizontal lines, so this also coincides with my horizontal level as well. So 38.2, which is in a 19,200 level, and a 50% level, that is a 19,340 level. So this is what my potential resistance band that I am seeing. So short term improvement can be there, but on the higher side there is an immediate hurdle. 80,800 level is a good support, and below that 18,400 to 18,200 level, which is a very strong support level. This particular range is a 10% correction on the Nifty as well, and 10% correction in the bullish market is a wealthy healthy correction. It offers a very good buying opportunity as well for the investment perspective. Now, having said that, the market is a short-term kind of the improvement side that we are seeing. So, how about the sectors? How the sectors are moving? So, in this particular week, we have seen that the market is down by 2.5%, whereas PSU has found a very less pressure, that is in 0.46, after the very good amount of the underperformance in a recent time. We have seen that PSU banks this week they have come up, and followed by the FMCG stocks, CPAC index. The sectors which we have a very huge amount of the selling pressure this week is that media and the metal sectors, they have picked up its momentum quite well. Means they have seen the very good amount of the declining momentum in this particular week. Now here I like to take the two sectors to bring the things into your limelight. One is in an FMCG space. Why FMCG space? Because FMCG space normally takes its seat front when there is a little bit uncertainty about the market. Maybe in a coming week there may not be much traction in the FMCG because we may see the technical bounce back. Some of the risk on sectors can do well, like metals. That is what under my radar. But on the high side, again I find that FMCG will give the defensiveness to the market as well. Now FMCG is the second best sector this week that has performed, even though it is down by near to 1%, but it is lesser than the compared to the other indices. And secondly, in our mechanism, the ranking mechanism, the things that I have seen, uh, I am ranking the performance, okay, how the prices has performed and how the prices has behaved based on their equivalent stocks within the one particular sector, and I then give the average to it. So let's say for example, this data compiles based on the previous week data. This week's data is yet to compile once we fetch the data. So we in the weekly summary, what I did is that, okay, this is what my last week, where the so 16th to 20th October, where the Nifty was down by 1%. So when the Nifty was down by 1%, so how the automobile has performed? So it is a 0.04%, 1%, cement, chemical down by 1.5%. So if I just understand that from the ranking perspective, which has performed quite well. So here I find that, okay, this is what an insurance, housing, and media sectors has did well. So I gave them the ranking. So okay, fine. As the insurance up by 3%, so it got a rank one, rank two. The housing, media is a rank three sector. So this ranking I have given to the previous 4 weeks. So it gives us a kind of a trailing effect. Okay, what are the momentum that they are going through? So and then I taken the sum of it ranking, and the sector which has in a list ranking, so that is in a quite outperformer over here. So let's say here if I see that, okay, which is the smallest one. So these are the smallest number, the financial, cement, construction. So I can understand that, okay, broadly financial, cement, construction did well. Which are the sectors which has not did well? So that is the largest to smallest. So here I can understand the PSU sector so far in past one particular month, the data that we have seen from the previous week. So it has underperformed comparatively well and textile and consumer services, insurance. So these are the ranking of the previous 4 weeks in a collected way that we have organized. Now, this data is not again a too much comfort to analyze the thing. So, being a chartist, I like to have the graphs in front of my eye. So, here I have just tried to plot the things, okay, where the performance are happening. So let's say, okay, here I am seeing that, okay, how the automobile has performed in the previous 4 weeks and how its ranking has improved. So fourth week, so 1 month back from the previous week, it got a ranking 15 out of 24. So this is the 24 indices that I have. So it got a 15 ranking, 15 ranking. Then this is the second ranking, and in last week it has performed 4 week. This week's data is yet to incorporate. Now let's say likewise, if I keep on seeing the sectors, the cement sector. So cement sector, I understand that, okay, it is maintaining a kind of a equivalent line, not too much improving or not too much deteriorating kind of thing. It is in state of balance. Chemicals. So here I understand that, okay, they have not performed that much well. So out of 24, sometimes it is a 22, 13, 16, 11. So not a part of top 5 or top 6 segments, and much of the part it is in a latter part. So chemical stocks, they are under the pressure, I can understand. Now, likewise, I can keep on seeing these all sectors and get a visual effect how that particular sectors are behaving. So let's say, okay, coming straight for to the FMCG. So here, if I click on the FMCG, I understand that, okay, in the 4 week back, this index got a rank of a 17, and over the period of time, on week basis, it has improved its ranking. So from 17 to 12, from 12 to 7, from 7 to 5. And this week also we are seeing that, okay, FMCG comparatively did well. It is just down by 0.8%. So it shows that, okay, of course, in this particular 1 month so far, we have seen the kind of the pain in the market. Nifty is down by, in this month, down by near to 3%. And when the market declines, your defensive stocks do well. But still, we are not out of the wood. So FMCG shows that there is some sorts of tractions is that. Now, when it comes to the FMCG space, so let me encounter some sorts of stocks to analyze the thing. So let's say Hindi Unilever is the one stock. Now, Hindi Unilever, it has formed a very good structure. This is the consolidation patch that we see. Prices are under, means this is what my upper band 2730 level. The stock is at a lower band of the consolidation patch, which is a very good support level. Right now, stock is at a lower part of the consolidation patch and trying to pick up its momentum. So when we see this particular stocks, we find that, okay, fine, wow, this particular stock is at a good support level. We can buy it because FMCG space is also doing well. But this is the thing where majority of us get it wrong. Even though the stock is at a support level, that doesn't mean that, okay, this is a good buy. The very first thing for me is that, okay, stock is below all the respective moving averages. So I will find a struggle to find the traction, the momentum in this. Now, secondly, if you see the relative strength of it, so let's say, for example, if I'm seeing the relative strength of it, so there is a Hindustan Unilever, and I find its relative strength in compared to a Nifty FMCG space. So here we go. So it shows that this is what a downward sloping channel. So relative strengthening is better to analyze on the line chart. So here on the daily basis, it is a downward sloping. If I look it on the weekly chart, then again it is severely under the negative momentum as well. And I don't find the kind of important turning points around to this level. Still, there is a little bit more scope to go for. So my price chart says that it is a support level, but behind the chart, when I find its relative strength, it is not giving me that much kind of a idea. But besides that, there are some stocks within the FMCG space. They are comparatively doing better. So let's say, for example, here I take, so that is a Tata Consumer. So this is the Tata Consumer that I say. It has also underperformed, but now it has started to pick up its momentum on the high side. You see some sorts of improvement is happening in the this particular line moving on the high side. So this is the Tata Consumer divided by FMCG. So when the line improves, that means that your numerator is strong, and in this case, the numerator is Tata Consumer. So Tata Consumer is outpacing the FMCG sector as well. So here we get an idea. Okay, fine. FMCG space, within the FMCG space, Tata Consumer is a stock which is comparatively doing fine. Now, once I get to the technicals of it, so this is a Tata Consumer. I understand this particular stock has in a structurally bull trend that we are in. It has consolidated well. So let's say almost very good period of time. So this is the period. For almost 2 years, the prices has consolidated. Because of this, whatever the oversold state the index has stock has achieved in the strong upside momentum, it got digested and your RSI has significantly reduced. And now it is of course started to recover on the high side. So this is a 2 years consolidation patch breakout that we are seeing into it. So that is a good thing. On a weekly chart, if I see the stock has given the breakout. So this is what my previous peak that I am able to see. Stock has struggled around this period breakout for a good period of time. It got breached, and after the breakout, many of the times we see that the stock retest. It's in a breakout boundaries as well. So from past 2 weeks, we have seen the same thing. After the giving up the good momentum, they have retraced back. On the daily chart, once I see from past couple of days, prices has retraced severely. On the lower side, it take the support at my 54 period moving average, and it is also at my roll reversal level. So reactions. So this has turned out with the support. By the same time, RSI, if I see, it has come around to 48 level. 48 level is not that much kind of the oversold state, but still the kind of the good correction happened from being at a 66 or 70 level, prices has reduced to the 48 level. Now it is starting to pick up its momentum. So this gives me the kind of the understanding that this is a good structure for the stock. Now from the educational perspective, if I have to make some sorts of view on this, so right now the stock is at an 890 level. So okay, above the 890, because this is what my previous hurdle level. So once price starts to move over the 890 level, it becomes a buy opportunity for me. And on the lower side, this is what my stop loss, 880 or 875 level kind of thing, which is a 10 to 15% 10 to 15 points या फिर near to 1.5% risk that I have from the short term trading perspective. And on the high side, the next best variations is my previous peak, that is a 910 915 levels kind of thing. So this is what my broader analysis on the Tata Consumer says, and stock can improve as well. This is what in the peak level, and in the rising trend we see that your highs get bridged. So 1, 2, 3, 4 subsequent highs got bridged, and there is a further possibility it can stretch further as well. So this is a what one forward-looking case study, not a tips, not a advisory, but it is an educational forward-looking case study that we are discussing right now. So in this video, summarizing the theme, we have discussed about the Nifty that right now it has taken a good support level. The short term bounce back cannot be ruled out. 19,250 to 19,320, that is what are now very stiff resistance for the market. 18,800 become the support level for the market. If that get breaches, then 18,500 to 18,200 level is a very good support level from the positional perspective. From a sector perspective, we have seen that FMCG space improving the space. Within that, we cannot analyze the naked chart. This is the very big statement that I am giving, because there are lots of things happens behind the chart. So we need to understand that. Otherwise, HUL looks good to the everyone because of the lower band of the consolidation patch. But many of the time it wonder us, being at a lower band of consolidation patch, stock breaches the support level because it doesn't have the strength in it. Whereas on the other side, Tata Consumers, the relative strength is better, technical structure is well, and the risk reward ratio is also fits well, which is minimal risk that we are taking in. So based on this, this is what the how the broader structure that we are defining. So this is for this video. See you in our next video. Thank you so much. Stay tuned.